Attention all economy enthusiasts and market observers. Today, we're going to unravel the unexpected twist in the tale of the US economy in the first quarter of 2023. Buckle up as we delve into the surprising contraction and what led to this unforeseen economic downturn. Picture this, it's the first quarter of 2023, and contrary to positive growth predictions, the US economy takes a left turn. Instead of growing, it shrinks, not by much, but by a significant 1.5% on an annualized basis. Now this might not sound like a lot, but in the grand scheme of things, it's a pretty big deal. Why, you ask? Well, this is the first time we're witnessing an economic contraction since the havoc wreaked by the COVID-19 pandemic. Now this contraction didn't just catch us off guard, it sent shockwaves through the world of economists who had, until then, been painting a rosy picture of growth for this quarter. The unexpected downturn has left everyone scrambling for answers and trying to make sense of what happened. So what exactly led to this sudden downturn? What were the factors that played a role in this economic contraction? These are the questions that have been keeping economists up at night. In the subsequent scenes, we'll be dissecting these factors one by one. We'll delve into the role of supply chain disruptions, the impact of rising inflation, and how geopolitical tensions and Federal Reserve policy might have contributed to this slowdown. The unexpected economic contraction serves as a stark reminder of how unpredictable and dynamic the global economy can be. It's a roller coaster ride that can take unexpected turns and leave even the most experienced economists surprised. But as we always say, the economy is like a puzzle. And to understand the full picture, you need to look at all the pieces. So stay tuned as we unravel this economic puzzle in our next scenes. This unexpected downturn came as a shock to many, as economists had been predicting positive growth for the quarter. Several factors contributed to the unexpected economic contraction. Let's take a closer look, shall we? Firstly, we have the ongoing supply chain disruptions. Like a row of falling dominoes, these disruptions have had a ripple effect across various industries, hindering not only the production but also the distribution of goods. This in turn has led to shortages and as a result higher prices. The irony of it all? We have the demand but struggle with the supply, creating an economic imbalance. Next, we grapple with rising inflation. A menace in any economy, inflation has climbed to its highest level in decades. This essentially erodes consumer purchasing power, making your dollar worth less than before. As consumers tighten their belts, economic activity dampens, leading to a slowdown. Then we have the geopolitical tensions. The ongoing war in Ukraine, among other global uncertainties, has cast long shadows on the world economy. This instability creates an environment of uncertainty and volatility, making it difficult for economies to thrive. Lastly, we can't ignore the role of the Federal Reserve's policy. In response to the inflation menace we talked about earlier, the Federal Reserve has tightened its monetary policy. This includes raising interest rates, which can make borrowing more expensive. While this move is aimed at curbing inflation, it may also have the unintended effect of slowing down the economy. In essence, the economic contraction is the result of a complex interplay of these factors, each exacerbating the other. It's like a puzzle where each piece contributes to the bigger picture. And in this case, the bigger picture is an economy that's taken a surprising downward turn. The Federal Reserve's tightening of monetary policy, including raising interest rates, may have contributed to the economic slowdown. However, just as they have the power to tighten, they also hold the potential to adjust, to stimulate, and to support the economy going forward. And that's the beauty of economics. It's as much about problem solving as it is about problem identification. The unexpected economic contraction raises concerns about the overall health of the US economy and the potential for a recession. A contraction signals a decrease in economic activity, which could trigger a ripple effect across various sectors. But before we let the alarm bells ring, it's crucial to remember that the economy is not a simple machine. It's a complex, ever-changing beast that can defy even the most seasoned economists' predictions. The US economy has demonstrated remarkable resilience in the past. Remember the Great Recession of 2008? The economy bounced back from that downturn, and it's entirely possible that it could do so again. In fact, some economists believe that this contraction could be a temporary blip, a result of transitory factors such as supply chain disruptions and inflationary pressures. Once these issues are resolved, we could see a rebound in economic activity. Policy adjustments could also play a significant role in shaping the future economic trajectory. The Federal Reserve, for instance, could reverse its monetary tightening and lower interest rates to stimulate economic growth. Policymakers could implement fiscal measures such as tax cuts or increased government spending to boost demand and spur economic activity. Lastly, let's not forget the important role of consumer behavior. Consumers are the lifeblood of the US economy, driving approximately 70% of economic activity. Even in the face of economic uncertainty and rising prices, if consumers continue to spend, the economy could remain resilient. However, if consumer confidence falters and spending declines, it could exacerbate the economic slowdown. To sum it up, while the recent economic contraction is cause for concern, it doesn't necessarily spell doom for the US economy. It's a reminder of the economic landscape's dynamic nature, which is influenced by a myriad of factors, from supply chain disruptions to consumer behavior. As we move forward, it will be crucial to monitor these factors closely, adapt to changing circumstances, and make informed decisions. Consumer spending remains a key driver of economic growth, and it will be crucial to monitor consumer behavior in the face of inflation and economic uncertainty. The unexpected economic contraction in the first quarter of 2023 serves as a reminder of the dynamic and unpredictable nature of the global economy. This surprising downturn, a stark contrast to the predicted growth, has been a wake-up call for many, highlighting the fragility and complexity of our economic systems. These systems are influenced by a myriad of interconnecting factors, from supply chain disruptions and rising inflation to geopolitical tensions and monetary policies. Each of these elements played a significant role in the recent contraction, shaping a unique economic narrative that we've unraveled today. But let's not forget, the economy is not a static entity. It's an organism, constantly evolving, adapting and responding to changes in its environment. And just as it has faced downturns, it has also shown an incredible capacity for resilience and recovery. The first quarter of 2023 may have marked a contraction, but that doesn't set the tone for the rest of the year. It's entirely possible that we could witness a bounce back in the coming quarters, driven by policy adjustments, shifts in consumer behavior, and the inherent robustness of the US economy. However, this potential for recovery isn't a certainty, and that's why it's crucial to stay informed. Understanding the forces that shape our economic landscape allows us to adapt to new realities, make informed decisions, and navigate these uncertain waters with confidence. The key takeaway from today's exploration isn't the contraction itself, but the lessons we learn from it. It's a testament to the unpredictable nature of the economy, the importance of staying informed, and the need to adapt to ever-changing circumstances. Remember, knowledge is power, and in the realm of economics, it's your compass, guiding you through the complexities of the financial world. So, as we continue to observe and analyze these economic events, we equip ourselves with the tools necessary to navigate the economic landscape. As we navigate the ever-changing economic landscape, it's essential to stay informed, adapt to new realities, and make informed decisions that align with your financial goals. Thank you for joining us on this insightful exploration of the unexpected economic contraction. We've navigated through some complex economic concepts, and we hope you now have a clearer understanding of the factors that led to this surprising downturn in the first quarter of 2023. It's an intriguing puzzle, isn't it? The way our global economy ebbs and flows, the multitude of factors that interconnect, and the ripple effects that one event can have on the entire system. It's a testament to the dynamic, ever-changing nature of our financial world. We've also delved into the potential implications of this contraction, examining what it might mean for the broader economic landscape. From the resilience of the US economy to the role of policy adjustments and consumer behavior, it's clear that there's much more to the story than meets the eye. But remember, even in the face of economic uncertainty, knowledge is power. As we've seen, staying informed, understanding the forces at play, and adapting to new realities are key to navigating the economic landscape with confidence. Now, if you found this content valuable, we encourage you to hit that subscribe button. You won't want to miss our upcoming videos where we'll continue to unravel the complexities of economics and finance, and explore the latest developments in the global economy. Whether you're a seasoned economist, a budding finance enthusiast, or simply curious about the world around you, our channel is dedicated to providing you with engaging, insightful content that empowers you to make informed decisions. So don't just be a spectator in the world of economics, join us on this fascinating journey, delve into the intricacies of our global economy, and become an active participant in understanding the forces that shape our financial world. Until next time, stay informed, stay engaged, and navigate the economic landscape with confidence.